Hi, it's Chris Benson. I'm the Chief Investment Officer of Reliant Investments. Today our video is to give you 3 reasons why most of our investors invest in real estate, and then secondarily, the 3 reasons why we love self-storage as a real estate investment class. So let me start with the one that everybody wants to talk about, returns. In real estate, I think the one reason most investors come to us is because they believe there's some significant upside on the return side of things. And I'm going to reference a study that we'll put the link to in the video called The Rate of Return of Everything. It's 145 years of data that some brave researchers from the Federal Reserve Bank of San Francisco did a study on, looking at the rate of return for the stock market, real estate, T-bills, and bonds. And essentially what they were looking at is the best risk-adjusted return for each one of those asset classes. And no surprise, I probably wouldn't be referencing it if this wasn't the answer, but real estate outperformed each one of those asset classes with the best risk-adjusted return, which is I think what all of us are looking for. So number 1, returns. Number 2, diversification. I think many of our investors come to us with investments in the equities market. They've invested in their 401k. They have a brokerage account. They've put enough money into the stock market and they're looking for something outside of the market, what we call a non-correlated asset. And all that means is with the ups and downs of the stock market, the asset doesn't go follow that same trend. And real estate is a tangible asset. It has a value no matter what, an intrinsic value to the land, to the building. So if the stock market goes up and down, our valuations may also vary, but not like the stock market does. So I think that's a secondary piece to many of our investors' plan, is the diversification of the asset class. And then thirdly is the tax benefits. So as many of you know, the IRS allows for something called depreciation. And all that means with depreciation is essentially tomorrow's real estate asset is worth less than today. Because things like your roof, your landscaping, the fixtures, the plumbing, all of that has normal wear and tear. And so the IRS allows us to write off the value of your project over a certain schedule. And that depreciation, which is a paper loss, right? You're not really losing money, offsets the income from the property. So in many times there's tax advantages to the income coming in, and you can write off most of it with the depreciation from the project. So 3 real estate benefits to investing in real estate: the returns, the diversification, and the tax benefits. All right, let me give you the 3 reasons why I like self-storage and why we've hitched our wagon at Reliant to the self-storage asset class. Number 1, returns. You're catching on to a theme here. Everybody seems to care if we're going to make money on this. So the returns are a critical part of it. And I'm going to reference another data set that we'll put in the video link here to the National Association of REIT Data. And what that is essentially a database that tracks the publicly traded REITs across all asset classes. And what it allows for is a good apples to apples comparison between different real estate asset classes. So we can look at self-storage versus apartments versus office versus retail. And they have 25 years worth of data, so it gives you a good long-term view of the asset. So self-storage in the last 25 years through 2018 did just under 17% a year. Now to put that in perspective, the S&P 500 in the same time frame did 7%. So as investors, if I'm looking at where I have the opportunity to create some upside on my portfolio, storage did pretty well. So our returns are really strong. I think the next question is, what happened in the downturn, right? So in the last market correction, 2007, 8, and 9, what happened to storage? And interestingly, storage lost less than 4% of their value. It was 3.86%. Comparatively to things like apartments, which lost just under 7, office and retail were in the double digits. The S&P 500 in that same time frame lost just over 22%. And the hypothesis behind that is Americans don't get rid of their stuff. So even when they're downsizing out of their house, they save their things. And I think it's a hope for a better day. When things get better and they move back into a bigger home, they don't want to get rid of their things. And so it proved out very well in the last market cycle that storage performed very well comparatively to some of the other asset classes. All right, so that was number 2. We got returns, we got downside protection, and then number 3 is the market consolidation opportunity. So storage is interesting in that there are 6 publicly traded companies, 5 REITs, real estate investment trusts, and U-Haul, they're the 6th company, which many of you probably recognize, who own about 25% of the storage market. And the other 70 to 75% is owned by a whole smorgasbord of different operators. Companies like us, regional operators, we have 47 properties across the Southeast. There's mom and pop operators that own 1 or 2 stores, and maybe they built it as a family business. And what that allows for us is a consolidation opportunity for the market, and we can enact some of our strategic business plans to create some revenue efficiencies in the property and ultimately drive additional revenue. So that's a great opportunity for us to continue to consolidate the market there. So there's our 3 reasons for storage. We got returns, we got downside protection, and then we got future opportunities. So look, I think this video gives you a good understanding of the main reasons why we want to get into real estate investing and self-storage. But to be candid, you need more information than this to make a good, sound investment decision. So what we've done is we put together a series of educational content videos where you can go and learn more about what you should know as a real estate investor. And I'm not telling you that you're gonna walk away from this as a real estate expert, right? We do this every day, all day. The 10,000 hour rule that the Good to Great book references. You need to spend time doing this and honing your craft. But what we're going to give you is a good educational foundation so that when you go out and look at the market, you can make good decisions to say, okay, here's some things that I've checked with the operator to understand if it is a good investment or not. So click on the link below. We'll get you to those videos, and we'll be happy to share as much content as we can with you. Thanks. Have a good day.